What are estimated taxes for side gig income? Imagine earning money from a side job and wondering if you need to pay taxes on it. Well, you might have to, even if taxes aren't taken out automatically. That's where estimated taxes come in. These are payments you make throughout the year to cover the taxes you owe on extra income from side gigs or freelance work. Since your side income usually doesn't have taxes withheld like a regular paycheck, you are responsible for calculating and paying these taxes yourself. Usually, you pay estimated taxes for times a year on specific deadlines. These deadlines are April 15th, June 15th, September 15th, and January 15th of the next year. Paying on time helps you avoid penalties for underpayment. If you earn at least $400 in net profit from your side gig, you need to file a tax return and pay self-employment tax. Self-employment tax is 15.3% of your net earnings and covers Social Security and Medicare taxes. You pay self-employment tax on 92.35% of your net earnings, which is your gross income minus your business expenses. If your income goes over certain limits, you might also owe an additional 0.9% Medicare tax. To figure out how much to pay, you need to estimate your total income, deductions, and credits for the year. Look at your previous year's tax return as a starting point, then adjust for any expected changes. Use tax calculators or worksheets to help you estimate your quarterly payments. Your goal is to pay enough each quarter so you do not owe a large amount at tax time. If you have a regular job and taxes are withheld from your paycheck, you can avoid making separate estimated payments by increasing your withholding at your main job. You do this by submitting a new Form W-4 to your employer, adjusting the amount they take out to cover your side gig taxes. Keeping detailed records of your income and expenses is also important. Deductible expenses like supplies, mileage, or a home office can lower your net earnings and reduce your tax bill. If your income varies during the year, you can use the annualized income method to adjust your payments based on actual earnings. If you underpay during the year and owe taxes when you file, you might face penalties unless you meet safe harbor rules. These rules say you have paid at least 90% of this year's tax or 100% of last year's tax. Managing estimated taxes on your side gig income involves tracking your income and expenses regularly, using tax worksheets or calculators, and adjusting your withholding if you have a main job. This way, you avoid surprises at tax time and keep your budgeting on track by spreading your tax payments evenly throughout the year.